Yo, what is going on, Bueller Gang? Bueller here again, and today I'm going to be covering the inside bar setup and how the Bueller Gang likes to trade it. Again, we just take the inside bar, which again, I don't care what strategy you guys learn this from, but the inside bar, the outside bar, most of your candlestick patterns have not come out of the recent years. This isn't some new strategy. So again, I'm not putting my name on it, stamping my name on it, but I am going to show you how we like to trade them with our levels, with our system, and everything we like to use on it. So I'm going to go over that today, and also giving credit to the Rice Traders. Shout out to Stephen Bigelow, rest in peace. But he was the one who opened our eyes to let everyone know who was the original creators of these amazing and powerful candlestick patterns. So we're going to go over them, and I also check the links below. There's a bunch of swing trading. There's a swing trading playlist and a backup swing trading channel that literally just covers candlestick knowledge and just stuff like this. Again, just basics with EMAs or without EMAs, however you like to trade. It's really all we do. So let's go over it. But today we're going to be going over meta. I wanted to show you these pictures because these are the befores. I'm doing a video afterwards. But this is a picture before on Meta, a picture before on Amazon, and this is an even older one on Amazon beforehand that I'm going to go over at the end as well. So we'll make sure to go over all three of those. But as you guys can see, though, the original drawing, though, again, is just seeing one candle form, right? It doesn't really matter the size of the day. Yes, a bigger one is nice, but getting a nice candle. And then the next day gets a higher open. Again, on a downtrend here, you can see we move down and then you move up. We get the higher open, lower close, and we traded our low and high, our high right here of this candle and our low of this candle traded within the high and low of the previous day's candle. Now if it was the opposite, it'd be the outside bar, which you guys can check out Leland's video on that. He has an amazing explanation on that. And this isn't the first time we've covered the inside bar. I just saw that we didn't have like an exact video for it, so I thought I'd put it up. I had a couple people ask questions, so I wanted to give them one place to go for this breakdown. But basically, your recent day trades within the previous day, the highs and lows. It doesn't matter how pretty it looks, doesn't matter how ugly it looks. You'll see we have three different variations here, which look a little differently. This one probably looks the best. This one's and this one's all right. Probably this one and this one probably the best too, and this one I'd say is But as you can see, though, the highs and lows trading within the previous day, that is what creates an inside bar. So don't let that confuse you when people type IB or hey guys, trading Amazon daily IB, Meta daily IB. Don't let that confuse you. That's all they're doing. So it's very simple. So you draw your highs and lows of each of those candles, right? And that's it. That's all you have to do. And that gives you your initial setup. Basically, you're looking for breaks and retests of this to this. You're looking for breaks of retest of this to this. That would be your target. Keep a short-term stop under that. If you, in this case, I would leave it at that day's close because it's so close and it's a powerful level. So if they were to lose that, it'd be a good invalidation. And then like this one, you could say, oh, it broke previous day lows, so I put my stop just a little bit above that. Was aiming for this 313 area. You could even round up your levels. Does it have to exactly be 312.37 you aim for? No. You could say, well, I'm gonna aim for 312.50. Make it a more psychological number, or even 313. Why not? What's already wrong with a $2.50 move? On this screen, it doesn't look like a huge move, but these are daily candles. That's a very large move for an intraday trade at least. So that'd be pretty significant. And then I'm going to show you guys a different method too, a couple different methods. You can focus on just drawing recent levels for further out targets. This is where it can be a little confusing for some people. So what I'm going to show you are two different methods, and we'll go over that when I get to my chart. But in one of these examples, you'll see I use just recent, what looks to be significant levels. I saw this recent low. I saw we had this big open. I saw we had this emerging candle right here. I was like, whatever, I'll draw these. And then this one, I was like, whatever, I see the open of this candle and the high of this day of this move here, I see these as significant levels, so I just drew them as short-term levels. But if also good, if you don't want to do that, I think I did it in this example. Yeah, you see how these come from the far left? So in this example here for Amazon, besides getting the inside bar set up, the levels, those 4 levels that we have, the easy ones, I drew these because, one, they were super close by. I was like, well, this is kind of no shit because there's like a gap here, and all it did was wick it, so it could be significant. So 128 could be significant. So it looks like there was 2 levels there that were kind of a combination area to break. But the outer levels, though, you can see we had a gap, so we used price history, and then emerging candles. All I did was I drew this level here and this level here, so basically the furthest extent of my inside bar. I extended those lines to the left, and then I went to the daily, drew emerging candles that were above and below that, and then that gave me targets for downside and upside. And then I could go down to the recent time frame right here, just looking at the past couple weeks, and then seeing, all right, well, I have a gap here that we need to mark that. I have these levels just outside of that inside bar, we need to mark that, and then everything else is set. So now we have targets anywhere we go. I'm looking for breaks and retest of 133. See, now this one's special. This one's a little significant right here. So you see, it's going to be situational. So right here, can it stop spamming the titles of whatever I'm in? All right, but so like this one, in this example, it was break over this, aim for this, right? But in this one, you can see they're so close by. What do? Just use both. So look over 133.35. We'll look over that. We'll aim for this high. We'll aim to fill the gap. We'll aim for 135.70s. That's it. That's simple as that. And then you can see the downside. They're not as close, so we can look for under 130.40s and then aim for, I mean, you could say 130, then 129, then 120. You could be really, tedious with it if you want to. Every 50 cents, every dollar. You could aim for recent price levels. You could aim for TA routine levels. It's really whatever your style is. It really does accommodate for everybody. And then you see this one. This one's different again. So you see how on this example, once you got breaking, there were more spaced out levels. Once they were breaking, there were more spaced out levels in either direction. Not this one. This one, once you broke down, there was one level and then another level right here. And then there's an emerging candle. So you had very, very close targets. Same thing for this side. So you could see how drawing not just recent time frame levels, but also drawing emerging candles if you need it. Again, going to the far left of the chart, grabbing the top of the green closes the first time they've broken that level. Those are going to be very powerful levels of price history to draw. So that's my little breakdown on identifying them and then getting your levels. Now we're going to go over the results of some of those breakdowns. So from bigger to smaller time frame. You guys have already seen them before. We're past all the planning. You've gotten the idea of everything. Now we're going to go through the breakdowns of what they actually did. So I'm going to go to the 2-day 5-minute here. So you can see here, this is the initial range for Meta, right? But look how much time went by. They kind of had a little dip below, looked up, retook today's open, retook the initial opening candle right here. Very nice move here. And then just a nice little grind up move. And then what? Then they broke, so you got your 40% entry. What is a 40% entry, everybody? A 40% entry is when you have a candle that breaks over for the first time. If you have rising volume, that also helps. If you have a secondary confirmation like an EMA or anything else, that also helps. But you're just looking for the candle to close over on the 5-minute or whatever time frame you like to look at. In this case, I'm looking at the 5-minute because that's what I like to look at. It closed over on the 5-minute. That's a 40% entry. We're taking that. We're getting in. Now you can scale out towards the middle of the range. You can scale out towards your first target. As you can see in this case, entry was above 321.82. The first slowdown didn't hit until 323.30s. Now, if we did say, okay, well, this is a great primary target, but I don't want to be greedy, what's something we can do to draw a very passive target in between this? On the bigger time frames, it was like, oh, that's a close target. That's going to be easy to hit. But let's say in the heat of the moment, we're like, well, that is kind of far. It's like a $3 move. So what should we draw here? A fib. Let's draw a fib. Let's go from that level to that level and then draw a price level at the 50%. That can be a beautiful primary, just first target. Again, yes, this is overall your main concern is getting to this level so you can get maximum profits on the play. But also, let's try to be passive. So let's say you bought a few contracts on this. Again, be aware, what did you buy? An open range breakout. So it's risky. It's only a 40% entry. 40% out of 100% confidence is why we call it that, right? So it holds that move, pushes up, hits the target, awesome, comes back down. Then what do you get? You get, if you look at just the candles, it's almost like a bullish engulfing. But you get a really nice long-legged candle, very indecisive, and then a very nice hammer holding. You could say it's also indecisive, but I like the size of the body here outside of that one. So you have an 80% entry sitting right where we got that. So now you have double the confidence of what this one did. And guess what this goes and hits? It hits the recent high. It hits that recent level. Whoops. It hits that recent level. It even pushes past it once, twice. They pull back again, hold a higher low over this same exact candle. And then they even push through it one more time. So we never once got to 325. So you can see how this would have hurt you. This would have hurt you because you would have been annoyed that you didn't get to your furthest level, right? But what could you have done? We saw a high, higher low, high, higher low, no high, higher low, new high. Oh, they're breaking down. They're breaking this recent higher low. So now our play has invalidated. So even if we didn't get to this target, just by navigating the trend of seeing lows and highs, we now noticed, oh, wow, they're breaking down structure. They don't want to take this to our target. So, one, we either are taking passive profits into this because we have multiple contracts, or you're trying to take it to this target and then you wait till you invalidate yourself. So either way, you can see how you're not hurting yourself. You're putting yourself in a position where you have a highest probability chance of making it to that target, right? So that was the meta example. And as you guys can see, we only focus on the 40% entry, the 80% entry. If you want to focus on the lead test and the buy the dip, The only two that I see on here, damn, that deleted everything. I didn't see any buy the dips on here. The only thing that was awesome this morning that happened was the fact that they retook the open. And you could say that it's a buy the dip, but it's not a true base build. A base build is where you come down, you make a low, you go back up a little bit, you have your emerging move, and then you come back down. You either make a double bottom or a higher low, and then that move is what you're going off of once it breaks that high. That's what you're going off of. That never once happened here. Now, you did have a lead test move happen. So you see how we kept pushing up. We made our high, high, high. You made a high, then you broke down. Then we never really had that lower high up here. Well, we saw the high, right? So what's the breakdown of this high? All the way down. Oh, go to the fib. I don't know why it did that again. But go from the high and go down to the lowest move, again, where it made its move here before its next green candle. What did it do? Extend this to the right so it's easier to see. They did make you a lower high. It just wasn't so easy to see. Sometimes you're going to get these moves where it's not as easy to see because it was more aggressive. They're not always going to be easy to see. When they're easier to see, it's because it's more of a passive sell-off. It's easier to see. It's not as easy to see on this. So they ended up wicking it back up. So what'd they do? They finally had their buyer. Then what? They had a higher open. This probably got people super bullish because they were starting to push towards the golden pocket. Then what? Sold off. Made a new low. This completely invalidates any of this buyer move right here. So now they've made their lower high. They have permission to keep selling off, or pulling down, sorry. I'm not going to say sell off. Makes it sound so aggressive. As long as they have control of this, right? And that is what gave you your lower high. Then you're looking for a break of structure. Where were you holding as bullish support? Where did we take our 40% and 80% entry earlier? Right here, right? So where do we need to see for a further continued break of structure? Right here. So profits being taken, buyers show up. Oh, they're trying to take it lower. They're faking shorts out. They took it back up. They closed it back over. And then, bam, they finished it up here. So they basically closed it near the high of day after making it look like they could have pulled it back very significantly. But they didn't. They held their gains. Now you've seen the proof. Oh, bulls held their gains of the move they made this morning. It's not just a visual confirmation. Now you have an actual technical confirmation. Damn, almost got all 10 of those. But let's go on to the Amazon example. So we'll do the recent example, the one that was the same day as that meta one, and then I'll go back and I'll throw up the chart link for the I think it was this day, I believe. So it went down and hit its first target below, and then that was it. That's all it did here on that day. So maybe we won't. Maybe we'll just redraw it here live. But let's go down to the 2-day 5-minute. We're going to go review the Amazon inside bar. So you can see they actually opened lower and then just ended up dumping. So normally what I tell my guys is if you see this and they break a level like this, draw from the level to the first buyer reaction like you saw me on the last one, and then look for a retest of that. And you can see you only got a single candle retest within the first 10 minutes of the day. So if you didn't take puts on this, it's okay. That was a very aggressive confirmation. That is something you wouldn't have entered very heavily most likely. So there is a way of catching that, but I wouldn't have said that was feasible or something you would have been super comfortable doing. But you could see it would have worked out. They did make it to the first target, but I am in no way, shape, or form saying you should be taking those plays. But I do want to go over something that I noticed. What do you see right here? I see a candle's... Here, I'll even draw it to show proof. So here's the high of this candle. Here's the low of this candle. So what do we have right here? An inside bar. Oh, so they pop up on smaller time frames too. They're very helpful on all time frames, right? What do they end up doing? Getting a green print over. Oh my god. It's confirmation. This is a possible reversal, and maybe, you know, logical thinking, you're like, oh, maybe they just want to revert back to where they fell from. That's exactly what they wanted to do. What does that look like on your bigger time frame? It's hard to see it on the bigger time frame afterwards because so much has happened since then. Also, the candle doesn't look the same. But you get an inside candle reversal. What do you get on your slowdown? Look at this. Oh, I thought I was on it. I was going to say an inside bar. I was going to try to sound smart. But here's another inside bar. Candle trades inside it. Candle trades inside it. Candle, 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 candle. They close over. All right, now you have confirmation to reach this level. Is that a lot of room? No. So are we taking a trade there? No. But we do have confirmation that it finally closed outside of this inside bar. It wants to make it up to here. So you can see inside bars, outside bars can be very helpful on all time frames. It's not just a daily time frame thing. This is just where they become most easiest to see. Also, I feel like some of those powerful moves happen from those daily inside bar finds. So if you end up finding one of them on the daily or the weekly and you draw it like that, it's going to be very helpful even just for a day trade. But what did they do after that? They just kind of grinded up. They got into that gap range. Didn't quite get to the two levels we have here or the top of the gap fill. So they slowed down. And fair enough. I know I'm stuttering a lot, but fair enough. I don't think it's fair to say they have to reach these targets once they've broken these levels. I feel like it's not fair to say that because you started lower. You were so much bearish. You even pushed lower, right? So a lot of energy was used, and there's going to be a lot of sentiment changing around, right? People are finally going to see, you aren't going to see retail traders buying this. You know, big money's already in. They already know the dip's coming, right? So a lot of energy was used is what I'm trying to get at. So is it really fair to say this has the energy to reach the top of that gap or the top of these levels? No. So once it dips down here and shows you reversal or a, you know, I would have preferred a hold here, a move up, and then like a higher low, and then try to target this level. But it is logical that it makes sense to remake it back to this level, and if it pops this level, to remake it back to this level. If it pops this level, to try to remake it back to this level. But let's see, where was the hiccup at, right? Where was the hiccup at? Let me zoom back out. What am I doing? So where was the hiccup at? We made it from here to here, right? We kept holding higher lows. We made it up. What stopped here, though? Just like we did on the meta chart, what slowed down this chart, right? So we got our high, and then what popped up here? A lower high. All right, so maybe we're not super bearish yet, but let's get a breakdown of this potential lower high. So we're going to go from the high of that move to the low of that move before your buyer candle bought the low, right? Extend it to the right just so we can see the exact candlestick. So that's the low. They buy it up, and they did close outside of the golden pocket, very significant, but they are not over that high, right? So we're still looking to see, can they make it to that high? Can they hold over it? This will confirm buyers do want to try and take things higher. What do we get? We get a higher close, we get a higher open. They dump it. They send it right back down. They basically destroy all confirmation, but not like our meta setup. The meta setup, they closed right here, so it gave you that confirmation quicker. This took 5, 10, 15 more minutes to show that they wanted to close and confirm that this lower high was, in fact, the lower high. So now you're short. You're flipping. What happens? So just like... Here, let me zoom it back out. So just like we said right here, you know, if they reverse from here, it makes sense to go touch here. So what does it make sense to do if we make our lower high and get back into this range? What does it make sense to try and go towards? This level again, right? And they didn't quite reach it. They didn't even get close. I mean, they got a little close, I guess. But they made very aggressive moves down to where good profits could have been taken on shorts just off of that IV stretching. Again, because you have a faster, bigger dump happening at a faster rate. Your contract's like, oh my gosh, it's going to reach the target quicker than I could ever imagine. And then that IV pushes, and then your extrinsic premium comes in. Your contract's worth more. And then, of course, you could see they pushed it up towards the end of the day, closed it a little bit higher. But there were some decent opportunities. The levels made sense. The price action was clean, even if it didn't make it to the level. So that's what I wanted to cover, again, was the bigger time frame down to the smaller time frame, and really cover it how we like to look at things. But let's jump out back to that daily. And let's clear this. Let's clear this, and let's review that inside bar together. I'm not going to try to accommodate the video. Wait, which example was it? It was from 10:05, I think. Yeah, 10:04 to 10:05. Okay, yeah, right here. It's this one. So this candle's high. This candle's low. This candle's high. This candle's low. So now we see it's trading inside of it. So something I like to do to get myself these, one, you could do the recent levels method. You could just say, oh, well, there's a clear low right here. There's a clear open here. There's a clear high right here. There's a clear close right here. Or, sorry, close, not open. Close. There's another pretty clear, significant... Here, wait. Pretty significant resistance here where this gap fill starts, and you can see this is kind of where those highs were stopped. So you could draw your short-term levels like that, right? Delete those again. This is what I like to do with my emerging candles. It is a little bit more tedious, and sometimes I guess you can make a mistake if you do it wrong, but get your furthest candle, your bigger candle, extend the levels to the left. Go to your chart, make it to the max daily, and then zoom on over here. We're going to find emerging candles. So we have an emergent candle here. We have an emergent candle here. Zoom it. And then we have one here. Wow. There's another one. And then you don't have to draw this. This is inside of the range. Let's not try to confuse our chart. Zoom it back out. And then go to the outside of that level, the one we extended over to the far left. That's, again, the top of that inside bar. Grab that emergent candle. Grab that emergent candle. You can keep going if you want to. I just try to go a few levels out because it's never going to be that crazy. And then go to the daily again so you can see it. And now you see, oh, wow. We don't just have this. Here, I'll color it. If you want to color code it like this, you can. It helps some people. I don't personally do it, but if you want to, it helps. But add your green, your red. So we're looking for buyers to this level. We're looking for sellers to this level. And then you have your outside levels, the ones we got from the emerging candles from the daily time frame. So now you have like a full game plan of levels set. It's basically just make it from this level to this level, 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 this level to this level. If this, then that. Be conditional. Never if this, then that. Always be conditional. That's why I always have this note right here. Limit yourself to one strategy. Start small. Staircase yourself up with mental reps. You do not overtrade. And then again, reminding my streams, I have this typed out and shown every day. What we do, this is what we focus on. We don't, if you anything outside of these, you're screwing yourself. So don't ever, don't ever step out of your realm is what I'm saying. So I'm going to have to do a little bit of 20 days. I'm going to go back. So it was the 4th, I believe it was. Yeah, this was, okay, yeah. So this was the inside day. This was the day that was breaking out. So this is your bigger day. This is your day that traded within that day. So here's your big day, inside day. This is the day we're reviewing. So you get the open here, and smaller time frame levels. Is there anything else we can add here? We can add our pre-market high. We could add our pre-market low. That's something else you can add. They're very helpful. You can add your previous day close, your previous day open, your previous day high, previous day low. We already have that. So you have really good intraday levels that we're focused on. So what do we get? You get a open here. They dump it. 4 candles later, you get a 40% entry. Why do we know it's a 40% entry? Because it closed outside of one of our levels. What'd they do within 10 minutes? Close back above it. Does that mean we cut our trade? No. What did we take here? A 40% entry. So we know that it's very risky to take this. So what does our stop loss need to be? It needs to be some sort of recent level. If you say today's open, you're going to just screw yourself. That is too far of a stop loss. By the time price gets up here, your contract is down way too much, especially for these guys who are grabbing short dated contracts, very close dated contracts. The shorter amount of time, the riskier the contract. Yes, it's the right contract to get because you want to get that move. You want to get the juice of that money pouring into your contract. You want that. But at the same time, if too much time goes by or too much distance goes by and the probability of your contract actually going in the money, it just decreases, well, that's going to hurt. So definitely try not to jump around and make up new rules every time you take these. So what I like to do is I like to focus on recent information. So if I don't have a peculiar level here, like we just drew my pre-market low, we just drew my pre-market high, you can draw the previous day close, you can draw the previous day open. If I don't see any peculiar level in place, I'll go off of recent time frame action. So here, let me zoom this again. What's going on? There we go. So you see we had the open. You see we broke down under the pre-market low. Okay, so you have initial seller pressure here, right? This is where I see the seller pressure picking up, not because of pre-market slowing down, not because of this candle being big and red, because it actually broke something. It broke pre-market low. It's saying it wants to go lower until proven otherwise. That's how I read the levels. If you're a BB trader, this is how you read the levels. They break under, they get a little bit of buy reaction, they break under again, they give us confirmation that they want to push under. So this is what I'm going off of when I'm taking these trades. I don't see it get back above pre-market low. This is my invalidation point. I see it pop that, I'm out, because in my eyes, it's trying to just range trade anymore, or possibly show buyer reactions above the today's open, possibly break pre-market high, possibly break the top of that inside bar, and then that's going to be a buyer confirmation left and right. You're going to see tons of those pop up, right? So this is my invalidation point. So just going over that so you know it's not made up. Other scenarios, that's not, the pre-market low is not going to be right there. It's not going to be so easy to see. So what else could we go off of? The fact that it broke down, consolidated, this would be a good just initial sign. Hey, if it pops above this, buyers probably will have open room and open skies up to this next level. It just makes sense. If it breaks this, it wants to go here. If it breaks this, it wants to go here. So always, again, if this, then that. If this, then that. Be conditional. So what do we get after that? We get a retest trade. So again, from our pre-market low to here, you get an 80% entry. They break lower. So it's almost like this is what some of my traders will say is a 60% entry, because it is another just open range breakout, but it's after a better retest. So it has more confirmation than this candle does. So this is what some of my traders will say, 60% just to be a smart ass, but it's really, it is a kind of a smart idea of them to say that though, because there is a scale. You're never going to be 100% confident in a trade. You're never going to be, you might be 0% confident in a trade because of something being completely worthless looking, but you're never going to be 100% confident in something. So it's good to kind of give yourself this scale on the setups that you see, because not every day you're going to see the exact same setup. Not every day you're going to see it the same way. So this is why it's good to be conditional. This is why it's good to be able to maintenance your levels each and every day, like we do in the stream. So you end up getting a continuation down. What can we do? We can draw that fib. So of the level that was broken, the inside bar, to the low of the move before a buyer showed up, what can we do with this fib? we can see who continues to have control. What happens right here? They end up holding under the... They didn't even make it to the golden pocket. They wicked it once, wicked it twice, never once hit it with like a meat of the close or open of a candle. Again, just rejecting with wicks, but never once closing over or pushing over the 50%. A very strong retracement. They end up holding this over the course of 5, 10, 15, 20, 25, 30. By the way, even during this is not feeling good for bears, even for someone who's in a short, close dated contract. Then they break lower. Then they almost make it to their target. But you can see you still didn't make it to your target. And this is why I tell everybody in chat, do not be OCD. Even if you are someone who's OCD, do not be OCD and only take profits when it perfectly hits your level. It's okay if it doesn't. Take profit towards your level as you see that momentum reaching it. You want to be the fish caught in the net. You do not want to be outside of that net whenever everyone's trying to reverse and buy calls again. Or just take the stock back up short term just to range it. It doesn't have to be just to go up. Just ranging it would hurt you too. So hopefully that information helps. That was actually a pretty fun breakdown. I enjoyed that a lot. Got to cover 3 setups I've actually posted in the server. These aren't things I didn't cover. But let's look at this, though. Let's see. Let's keep covering the story like we did the other 2. So they end up holding above that target, right? So they pretty much make it there. And you saw the daily candle. It was a hammer, so you know it finishes higher. But what happens here? So here's the low of our move. I'll just somewhat mark it. I am kind of off. Here, we'll just mark it with the level. So there's the low of our day. And then what happens? You get a little bit of a buyer move, a little bit of a pullback, and then another buyer move. So we now see there's a higher low here. We see this. There's a higher low. It's clear as day. So what can we do? We can go from the low of our move to the top of that first buyer move to see, did this pullback hold the control point or the golden pocket? This would be what gives you that confidence to possibly take a buy the dip setup. If you know what the base build buy the dip setup is from my YouTube channel, you know that we like to buy not just the lead test lower highs, but also the buy the dip higher lows. This was a confirmed higher low. You actually get, if you just look at the bodies, you have a bullish engulfing, a very nice confirmation. You end up getting very slow test of that top fib level, again, because they need to make a new high to keep showing, hey, buyers are still in control. What do they do after that? Those 2 5-minute candles. They push it. You almost get a 3-bar play look here and a continuation. So where does it logically make sense if you get a higher low down here at this level or any level down here? Where does it make sense to go back up and hit the level in which it came from, right? So if we broke this level, made a base build here, and then made it back up to here, this would be your target. If you made a base build down to here, made a higher low, where's your target? That next level up here. You don't need to be aiming for the sky. You don't need to be aiming. You can aim for the today's open if it somehow has the strength to get there, and you have, you scaled out like 8 of your 10 contracts here, and you want to make the other 2 go here. That's fine. That's okay, because you've scaled out your risk. You're not still fully in your original position on that. So that's very helpful. But it logically makes sense that you make it to this level, right? Or at least try to. Again, it's not going to always be perfect. Sometimes we're going to stop short. It's not always going to be perfect. But in a perfect scenario, yes, you want to aim for that target. You want to sell as momentum pushes into it. We don't care if it perfectly hits it or not. So as you guys can see, there were amazing ways of catching good short-term plays on a lot of these charts, just again, based on such an easy looking setup to find. You go to your daily time frame and you just look to see, is a candle trading inside of the previous day? And if it is, awesome. And if not, it's an outside bar, well, then you could trade the outside bar. If you want to check out that video, I'll drop a link to the description on that. But guys, if you enjoyed this video, please drop a like on this. I took a lot of time to go over this. Recent setups we've actually posted. Again, I'm not going over things we don't actually do. I'm not going over things we didn't actually post. So please enjoy the content. I hope you go through this as well as some of the other videos. But please drop a like on this, drop a comment, and let me know what's your favorite ticker or what are some different inside bars you've done over the time. If you want to comment below the ticker and the date of that inside bar, awesome. I'd love to look at them. But guys, I'll see you on the next one. Thank you guys again for checking this out. And yeah, love you all.